happy to have you and host you here, Kathy. I mean, super excited to hear about your background. You have obviously came from a very established background, from Goldman Sachs and doing banking, and then you then move on towards running a fund, a VC fund, MPower Partners. And I think we'd like to first hear like a bit about your background and what made you make this move to VC and start the fund.
Sure. Well, thank you, Jarrell, for inviting me. It's a pleasure to be here. I'm dialing in from Tokyo, Japan, where I've been based for, over 3 decades. And I'm actually Japanese American. I was born in Mountain View, California. My parents are first generation Japanese immigrants. They landed in what is today Silicon Valley as farmers. And my father ended up creating his own commercial flower nursery in the Salinas Valley, where I did, I guess that was where I grew up until I went to college. And my family farm started growing chrysanthemums, then switched to roses, and then ultimately to orchids. And my sister now runs the business since my father passed away a couple of years ago. And I am told our family orchid business accounts for about 20% of the US orchid market. So if any of you go to Whole Foods or Trader Joe's or Safeway, you might see Matsui nursery orchids near the cash register. So I grew up in a very rural part of California, and I went to school in the East Coast. I frankly initially wanted to enter the Foreign Service. I did an internship at the US State Department. That made me decide I didn't want to go into the Foreign Service. So value of internship experiences, very good. And after college, I was granted a 2-year Rotary Foundation scholarship, the Rotary Club. And that was the first time I was able to come to Japan, the land of my ancestors. I'd never been to Japan until that point. And that really got me interested in the country. Frankly, until that point, I didn't really have a lot of interest in Japan. I was forced to take Japanese language lessons every Saturday morning growing up, which I despised, as did my siblings. So I kind of distanced myself with Japan, but then as I became, more mature, rediscovered the country of my roots and my ancestors, I really got interested once again. And then I eventually made my way into graduate school, not an MBA, but SAIS, the Johns Hopkins School of Advanced International Studies program in DC. And during that 2-year program, I had the opportunity to return to Japan as an intern for what was formerly called Matsui Bank, one of the large, Zaibatsu banks at the time. And that got me interested in the idea of working in Japan, not frankly for a Japanese bank, but working in finance and working in Japan. And so hence upon graduation, I returned to Japan. Actually, I met my husband that summer as well. So it wasn't only a career decision, it was a personal choice. He's actually German, so it's a very bizarre set of circumstances, but we met in Japan. We got married, and actually I had to find a job before I got married. I ended up finding a job in investment research at a UK brokerage firm called Barclays. And then after 4 years, Goldman approached me and I became Goldman Sachs's Japan equity strategist, where I stayed from 1994 to 2020, a pretty long stint for anybody at Goldman. And I retired as the vice chair and chief Japan equity strategist 2 years ago. And during that time, so I was essentially a research analyst at a time when Japan was frankly really struggling after what they called the post-bubble, asset bubble period. And so I don't know if you maybe call it economic history at that point, but people said back then, because everything, property prices, equity prices, everything was on fire, that the value of the land where the the emperor resides in the middle of Tokyo, not too far away from where I'm sitting now, was worth more than the state of California. That was when Sony was buying Columbia Pictures. That was when, I can't remember who was buying Rockefeller Center, New York City. Japan was on top of the world. And then somebody turned out the lights in end of 1989 and the party was over. Then deflation collapsed onto the economy. Asset prices collapsed. The economy stagnated. Demographics were a huge headwind. So as a person who's trying to give advice about the direction of the Japanese economy, where the stock market is going, I had no choice but to really focus my research and analysis on a lot of these structural challenges facing Japan, which included many, but things like at the very corporate level, Japanese, let's say, ubiquitous standards of corporate governance, which were not, frankly, a global standard, but Japanese unique standards, which did not pay heed to the extent that I thought it should to minority shareholder interests. I could go on for 3 hours about that topic, but leave it there. About the lack of diversity, particularly gender diversity. Japan at that point had one of the lowest female labor participation rates in the developed world. And I, as an analyst, can play with numbers. And that was the birth of what we call womenomics, women in economics, i.e., my thesis was the more women were employed in the economy, the greater the impact to GDP. And that's sort of what I've become known for, but that is certainly not all I did at Goldman. But so kind of taking that, and frankly, so my clients when I was at Goldman were all institutional investors, pension funds, hedge funds, sovereign wealth funds, activist funds. And Japan, for the most of the last, 20 years, was deemed by many global investors as a really cheap market, but also cheap for a reason, because of what I highlighted before, governance challenges and things like that. I had clients, though, like activists who were trying to persuade big companies like Sony or Toshiba to change their ways, to change their governance practices, to bring in, let's say, outside directors, which was not the norm 20 years ago, for institutional investors to actually vote their shares. Voting was actually not the norm either. And while I think there was some progress made, it was frankly very slow going. And I think if you just take a step back and consider, a lot of the big established companies here, of course, are big and established because they've been around for over 100 years. It's very hard for them to change their mindset and hence their behavior. So as I was thinking about what to do in my next chapter, along with my two partners, Yumiko Murakami and Miwa Seki, three of us grew up in the world of Japanese finance. Three of us did most of our work with publicly traded large companies in Japan. We're all working mothers. And we thought, there's still so much that needs to be fixed in the economy for the world's still third largest economy. Where on earth is the growth going to come from? And so kind of taking those two things, we thought, well, given our backgrounds and experience in the areas of corporate governance, in diversity, in particular in sustainability, it just happens to be called today in an acronym ESG, environment, social governance. So we thought, instead of waiting to change the mindset of large companies once they're well established, which has been hard, wouldn't it be easier to apply these principles of ESG or embed these principles at a much earlier stage when these companies are, let's say, teenagers, as opposed to fully formed adults? And I will say in the beginning, some people we spoke with, just vetting the idea, they said, that's not going to work because big companies don't do ESG correctly. How can you possibly expect startups to do this? But I think we got very lucky with the timing. Despite COVID, we managed to raise about $150 million for our fund.
Mm-hmm.
And it's not that we're only investing in companies in the ESG domain, but that the main mission of our fund is investing in companies that use tech to solve societal challenges. But by integrating ESG into their business strategies, that is the key to scalable and sustainable growth. And we found that our LPs, limited partners, investors in our fund, were very keen to integrate ESG throughout their portfolios, but they didn't really have much in the venture space, in the startup arena. And that's kind of where we came in. So it's not even been, 10 months? We've just gotten started. We had to build a team, we had to raise money and get all the plumbing together, but it's been really exciting and fun. That was a long introduction, Gerald.
I
Sorry.
know that was amazing. I mean, there's so many points that we could have like many more conversations about, from the womenomics to the valuation of like current situation. We'll probably talk about that. But I really want, the focus of this session is really to drill down onto leading rounds. And also a bit about how you support your portfolio companies, right? So let's go into a little bit more detail about leading rounds. So as a 150 million round, 150 million fund, you're probably most expected to be probably leading some of the rounds. I know some of your recent investments, you are co-lead of certain rounds. So we'd love to hear about, I guess, what are your thought process on like your first move to the venture world and you're starting leading rounds. Like it could be intimidating to some early fund managers who just enter the space. Like how do you guys get prepared to lead a round? And I guess what are some of the considerations you guys had among the three of you before you decided I want to raise a 150 million million fund, and also to start having a fund strategy of leading rounds?
Mm-hmm. Sure. So, frankly, we didn't start out by thinking we'd actually get to even 100 million. We thought it would be, let's start small and just see how it goes. But we were very fortunate with some very good response from, as I said, LPs who are very like-minded with our mission, very aligned with our mission of integrating ESG with startups. And so, lo and behold, we find ourselves with a larger amount of capital than we initially anticipated. But we also wanted to target a zone in Japan's venture capital market that was maybe less crowded. And in this market, well, first of all, as a backdrop, Japan's venture market is absolutely tiny, even though it's grown 7-fold or 8-fold in the last 8 years. Last year, the total amount of venture capital invested in this country represented only about 1% of the capital invested in the United States. Okay. So even though the growth has been really high, the absolute amount is tiny. Mm-hmm. And one of the issues or challenges is that the VC capital, independent VCs and corporate VCs, CVCs, very heavily focused in the seed and early stage of the market. And there is a dearth or shortage of risk capital provision at the later stages. And what does that mean? That means that if you're a decent growth startup, by the time you get to that later stage, either, well, you don't want to run out of money, so you need to raise more capital, but the providers of that capital are so few that leads them to be very tempted to exit through an IPO. 90% of the exits in Japan, bizarrely, are through IPO, not M&A. And it's very easy to list on what they call the Mothers Exchange. It's kind of a high growth specific market in Japan, kind of a mini NASDAQ of sorts, but very easy or lax listing requirements. So relatively easy to list and raise capital that way. The problem is many of the companies we've observed list prematurely. They're so tempted by that, ringing that bell. They list, but then their growth trajectory just plateaus after that. And our view is if we could help provide more capital at that later stage, that would help these companies scale, more, get more traction, get to a critical mass that could be maybe a better target for acquisition by somebody or a bigger, IPO at some point. So that's kind of been our focus. And so I would say of our experience in the last few months, in terms of your question, lead or follow, because of our size, there are many situations which we can easily lead. The decision whether to lead or not, there's so many considerations, but for us, it's super important that this piece of not just the company, again, having super high potential in whatever it's doing, but truly committed to walk this ESG journey is as important. And so, this is a hard thing to discern through just several Zoom meetings, right? So we conduct, along with regular due diligence before we decide to invest in any company, we also in parallel conduct an ESG due diligence set of interviews. We want to get at the culture of the company. We want to understand, okay, if they're gonna commit to an ESG journey, we actually require them to commit to a roadmap with KPIs, with a timeline. So who, in fact, is going to be held accountable for sticking to these KPIs or making progress? We want to know, that sort of thing. So our decision to lead, if the company is, not as keen, for example, in those aspects of ESG, it's a little bit more tricky, I think, for us. It also depends on who else is in the cap table, right? The other people on the cap table have zero interest in ESG or think it's irrelevant for the company. That would also help us decide, should we lead or should we follow? Right.
That's interesting. I never really thought like the other people on the cap table would actually affect your decision on whether to lead or not, depending on how focused they are in ESG. But what are some of the common mistakes that you see, like some funds that are new to leading, and then when they start leading, and then it's like, oh, like it didn't really go as well as planned. Like any of the experience you have so far that you have encountered?
Well, I think there are many potential, I guess, pitfalls if you're leading, particularly now. And Japan's the so-called Mothers Exchange has collapsed since the beginning of this year. So valuations that were in, let's say, price to sales 10 to 15 times only 6 months ago are now 5 to 10 times. Now, if you're the lead, and in Japan, if you're the lead, you essentially write the terms. We have seen many situations where the lead that's been identified has terms that are frankly just completely malaligned with the current market conditions, right? They're based on comps 6 to 12 months ago. Yeah. So it's very tricky for those teams to perhaps draw other investors at a time when the market is so dynamic, to convince them that these terms are economical, right, for others. There's also, I think, we haven't run into this, but we can see potential risks if the lead does not conduct thorough legal due diligence. Perhaps in a later stage company, the lead just assumes that DD has been done like for them. But as we all know, with startups, things can change in 3 months, in 6 months. Mm-hmm. And if you don't do that check, nobody else is going to do that check, right? Because they're relying on the lead to do that. That can provide some risks or present some risks. So, risk management and I guess pricing, the terms, that kind of thing.
Got it. And you mentioned, pricing, right? So it's very interesting, like in current days, like the whole astronomical rise of startup valuation and all this stuff. And you talked a little bit about your experience in, I think, like the history of Japan, where there was like a stagflation moment, and it was like a top of the world moment. Do you see any parallels, like from like the past versus like the currently what's happening in the startup scene? And how are you thinking about valuation in these days? for especially for like the growth stage companies that you're looking at, whether they're overvalued, undervalued, like what are the additional risks in terms of valuation wise?
Sure. We think about this all the time, every day. It comes up every discussion our team has on deals that we're currently looking at. I don't think there's frankly, a black and white answer, as we know, and as I experienced in my former career. So much is based on kind of sentiment. It's a bit more art than science, but anybody can kind of look at this set of macro circumstances the world has been living in, of basically a zero cost of capital. While the real economy has been struggling, particularly under the pandemic, the financial economy or asset prices have been on fire, right? Which of course has led to all the inequity that we now suffer from in the world. So with that kind of Goldilocks macro environment lifting or elevating asset prices across all asset classes, particularly in the private space, when the tide starts to roll back, right, it's going to uncover companies that were just sort of in it for the ride, so to speak. They just happened to be kind of in a similar space. It was too late to get into company number one, the leader, category leader in that space. So I went for number two and number three. But if the valuations that those number two and number three ranked companies were very similar to the number one company, then that's obviously coming under a lot of pressure right now. So I think, I'm more of a macro person, and I've seen many cycles in my career. The tide rolls in, the tide rolls back. A rising tide lifts all boats, lifts a lot of valuations. And when the tide rolls back, you kind of see the reality, right? Who are the companies that are really, and I think also this is a great test of resilience of managements, right? We've experienced or had dialogue with companies that have really had to seriously pivot hard their businesses in this pandemic. Some of them have pivoted in the right direction. Others are still swimming in, black water, trying to figure out what's the next, how do they get out of this? So it certainly hasn't been easy, but I think this more challenging environment is actually healthy from my vantage point, because it tests the resilience and the resolve and the determination of particularly startups, right? Which is, they're just struggling to survive in a normal environment, but you get this, headwind thrown out at you that forces you to really be flexible and resilient. What are you doing with your staffing? We've seen companies that have had to cut back their staff like 80%, and then COVID calms down, and then their business, explodes, and they are just
right.
Can't keep up with how much staff they need to recruit. So they've got a very, very, nimble infrastructure and leadership, and a very strong, compass of a culture that's going to enable them, to withstand all of this volatility. That's why I came back to that. ESG is not just about ticking off all these boxes, which I think tends to be the perception, but it's really about what is the culture of that company, of the leadership. How do they work together? How do they cope with challenges besides COVID, right? These are the things we're trying to get an assessment about.
Got it. That makes sense. Follow-up question on that. I know, like MPower Partners, you guys do both growth stage and a little bit of an early stage for international companies. So how I guess like for the folks in this audience, some of them may be wondering what is like diligence process that's different between the two different stages, right? Like the growth stage ones versus the early stage ones, and also, are you a little more cautious of the growth stage because like it's obviously a little more risky in terms of like an inflated valuation?
Yeah. So you're right that there are not completely different approaches, but there's definitely a difference in how we need to approach growth versus earlier stage. And obviously with the growth stage companies, they have traction. Their unit economics are usually pretty decent. It's about how do they get from, they've kind of made it this far, then how do they avoid plateauing? How do they drive growth into the next stage? So there's usually a lot more, of course, information and data available. So we do a lot more analysis, frankly, number crunching for growth companies. Whereas earlier stage, oftentimes there isn't the traction. There aren't much in terms of numbers. You also don't really know about what kind of comps you should use. In some cases, they're very niche companies. And in that case, what is the TAM? What is the real market potential for this kind of company who nobody else has dreamed about, but this particular set of individuals? So you have to kind of look at more things like, I don't know what you call, like intrinsic value for this business in a blue sky scenario, or it's of course obviously much more risky, those businesses, because you just don't have as much information to make that judgment. So a lot more weight is placed on the team, the strength of that team, the ability of the, I guess, founder to recruit, top talent, which is definitely there's a war for talent here, like everywhere else.
Yeah.
The quality of the technology, the moat of that technology, super critical. So it's definitely different.
Got it. Yeah, I wanted to, have a pause now. I'm opening up the questions to the audience soon. I know you guys might take some time to write down your questions in the chat, but feel free to, turn off mic, turn on camera and jump in it to ask any questions if you have, or raise your hand. Kind of signal me if you have any questions. I want to make this session really interactive and beneficial for you guys as the audience. But in the meanwhile, I have a last few questions that I want to ask you while questions from the audience come in. So alongside let's focus more about supporting portfolio companies. How are you guys supporting your portfolio companies? I know for sure, probably helping global companies enter Japanese market. That's probably like the most obvious kind of portfolio support. But what other unique ways are you doing to kind of help your portfolio companies in whatever means? And what are some of the common areas that you feel like you're always helping your portfolio companies?
Sure. So I would say the majority of the companies we look at are more B2B, so more enterprise facing. And given that particularly the three of us founders of MPower, we have very strong networks within corporate Japan, within the government, regulators. When it comes to making introductions, for instance, to companies that might be on a portfolio company's target, customer list, biz development, that kind of thing, we can be quite helpful in our view. And like you said, our assistance of global companies, for example, Jupiter, which is our third company, it's based in San Mateo. They're a climate risk analytics company that we believe has the de facto global standard in accurate assessments of climate risk for physical climate risk around the world. And while they are in Japan to some degree today, one of the reasons they decided to partner with our fund is because they believe Japan is probably one, outside of North America, perhaps the second or third most important market for them to target. And they have some connections, but not as much as, say, we could provide. So that's kind of an obvious area of support, which a lot of other VCs do. HR support, trying to find anybody from a CFO to a CHRO to a CXO, of course, on the HR side, but also, and I think one of the reasons a lot of companies have come to us for help is that they've heard about ESG, and they kind of understand why ESG is important. But even if they understand the why, they don't really get the how to implement or how to integrate ESG into their businesses. So that's frankly where we spend the most time. That's where the engagement with the companies is most intense. And the kind of, it's very, I won't go through the details, but the first step is for each company to figure out what their most critical ESG materialities, the most important ESG factors for my business are ABC. And that might be clear to the management or the founder, but is it clear to the other stakeholders within the entire organization? That may be less clear. So one of our portfolio companies, they decided to do a very interesting approach, and they engaged their entire company. They had each division, had volunteers from each division join what they formed, which was called an ESG task force. So each of the task force members came up with a particular theme in ESG and just brainstormed. And it was interesting because their observations after this initial exercise was, wow, I'm in the engineering team. I've been working at this company for 3 years. I've never thought about these issues, right? I've never thought about how to improve employee engagement. I've never thought about my personal carbon footprint. I've never thought about, oh, I handle data every day, but do we really have, best-in-class data security protections in place? We do all these things that I think are good for the community, but we never communicate that to the outside world. Maybe we should do that. All these things which really trigger thought-provoking discussions internally. And so once they determine those materialities, then, like I said earlier, they determine or they decide on targets for each. And in Japan's context, like I said earlier, Japan is very weak on diversity in all respects, but particularly gender. And very few of the startups we've met have diverse boards, just as an example, or diverse leadership. So we can help them because of our networks to maybe find or identify, it doesn't have to be women, it could be foreigners, or it could be, anybody, candidates for the companies to consider. And that's another area that we provide a lot of help with.
Got it. Yeah, you mentioned diversity. I think, I kind of mentioned about like the whole double clicking on the womenomics factor or area that you are really, really huge on. Curious to know, you obviously have started a fund with your two other partners, and you guys are all mainly female-led fund. Has that been like, what are the pros and cons of going into like angle, especially in like VC, which is like mostly male-dominated? And yeah, I'd love to hear more about your experience in that way and navigating the fund, and like how is it like being a mainly women-focused fund?
Mm-hmm. Well, the three of us are certainly not unused to, or we're certainly very accustomed to be the only women in the meeting room for most of our careers. So it's not unusual for us. But we decided at the outset that we wouldn't push the fact that we're all a female-led VC fund. It's kind of obvious when you look at when we're on a Zoom meeting, it's usually all men on their side and women mostly. We do have a male on our team. We're a 9-person team so far, but 8 women and 1 male, 1 brave man. And so we don't really need to say anything. It's fairly obvious when they look at us. And of course, the media has written up us in yes, we're very diverse. The team is very diverse, et cetera, et cetera. But at the end of the day, it's not like we went out and said, okay, we need to find 8 women. All we did was try to hire the best quality talent who happen to be women. We have a Chinese national on our team. We have an African American who's an ESG expert. We have an LGBT person who is one of our industry experts. But we didn't go out like, here are the boxes we need to tick, and let's find people who fit in those boxes. It just so happened that way, very organically. In terms of our targets of investments, we don't have a quota. X% needs to be into diverse founders. But you can probably imagine that when somebody like us shows up on the VC scene here, minority founders, whether they're women, whether they're LGBTQ, whether they're foreigners, they tend to gravitate towards MPower because they think, well, maybe we'll have a more empathy, for whatever they're trying whatever issue they're trying to solve for. So that's been great, because I think we get to see a lot more deals and founders who perhaps have been passed over by others. And Japan suffers from low entrepreneurship rates in general, but particularly when it comes to minority founders, it's particularly very, very low. So that's something we definitely want to fix. We've also just announced our own DEI policy as a fund. It's on our website. And part of that, we actually announced an event policy. We've discovered that, most events in Japan are very undiverse, but the startup world is actually worse than the big company world. And we get a lot of speaking requests, and we just decided we're going to set a threshold that at this threshold, there's not a minimum percentage of speakers are minority or diverse speakers. We will not participate in those events. And not to take an antagonistic stance, we're saying to the organizers, we will help you identify diverse speakers if you work with us to get to that threshold. So that what we're really trying to kind of change this ecosystem here so that our children, when they reach our age, they're not faced with the same landscape. And I think for a lot of women and young girls, venture capital is so fun. I frankly don't know why it didn't start earlier. I'm learning something every day, and there are a lot of companies that are super innovative, really disrupting the incumbents in across many sectors. It's just like I feel like a kid in a candy shop every day. So many great opportunities to look at.
Yeah, it's super interesting. Like the DI initiative that you mentioned, like not speaking unless like a certain component of the event is like diverse enough. At this point, anyone in the questions again, anyone in the audience, sorry, feel free to just pop in a question, and I would love to have you ask your questions live to Kathy here. But meanwhile, wanted to also follow up a little bit about like the whole women fund and finding your partner. I think the question here is, how should people think about finding your own, like your partner for running a fund? Let's say, like for yourself, you found two other partners who are female, right? So a number of our folks here are possibly going to be running their own fund in the future. What are some of the things that you would encourage them to think about when deciding between, should I do it alone? Should I find a partner? And what is the background of the partner, the demographic? Should I get a winning partner of the opposite sex, or what's the combination? Like, what are your thoughts on that?
Well, this is just my personal view, but I'm spending a lot more time with my partners than with my husband these days. So unless you really get along and you really understand each other's strengths and weaknesses, and can work together through kind of thick and thin, it's a tough slog. I think I think for us, we just happen to be close friends. Actually, our birthdays are the same month and same birth year. So we celebrate our birthdays for the last 20 plus years. So we're kind of like sisters. And the first thing we decided, because this is also, it could be a downside, right? If you set something up with your friends, being friends and having dinner once in a while is very different from running a business, right? And we said off the bat, whatever happens to this fund, if it completely fails, the most important thing for the three of us is our friendship, and we'll never sacrifice our friendship for whatever happens in our business. And that was really important, for us. But have we been tested? Have our relationships been tested? Have we had a difference in views? Absolutely, along the way. And I will tell you right now, I could have never done this by myself. I don't know how people do this alone or with two people. Of course, maybe if it's a much smaller size, you could do that. But really find people who are complementary. It's kind of saying the obvious, but complementary to your skill set. And of course, the three of us are actually quite similar in terms of our background. So we had to complement our skill set with people who have had venture investing experience, who've seen from sourcing to exit and beyond. We're also crossover investors. So we may hold the shares beyond the exit, beyond, like, say, an IPO. So in that regard, it's a very long journey. I think it's kind of like my second marriage, with multiple people. So, I have other friends who've done this, some successfully, some not so successfully, and not just VC, hedge funds or whatever. And I think the true, I don't know, there's no secret formula, of course, but if things go really, really wrong, can you work with this person or persons to find, good solutions to get out of the crisis or out of the mess? And we've had a lot of ups and downs in our young life so far of a fund, but so far we've managed to find we have a common compass of sorts, of the way we want our fund to be. We have our own ESG charter. We have very high standards of expectations for our staff, but we also give them super generous benefits, probably more generous than any other VC in Japan, because we want to be an employer of choice. And at the end of the day, all we have is our people, right?
Yeah.
So that's most important.
Yeah, and VC is obviously a people business. One follow-up area. So in terms of making decisions, how do you? Do you guys do it on a consensus basis or a majority basis, or how does it work between your team?
Yeah, so we have an investment committee, not just the three of us, but our investment team, senior people as well. And we decided when we created the fund that it would be unanimous decision making for investing in startups, because I think, and there are different views around this. Some are a little bit more pyramid-like, but we just decided, and this is not, you buy a company today, you can sell it tomorrow. You buy a company, again, here's another marriage. You're kind of married to the company for a very long time. And if you're not all truly believers, maybe you don't have to all believe in the same degree, but we all have to unanimously support whoever we've decided to bring into the MPower family, right? And so that was really important for us. Everybody doesn't have to completely agree on, have to have the same degree of excitement for each portfolio company. But once we decide unanimously, we're all in, right, in terms of the support. Otherwise, I think it becomes very tricky, right? If some people are really more enthusiastic about company A and not so much on company B, that's not bringing the whole team to the portfolio company, which is what they're looking for, I think.
Got it. Yeah, I do have a question that was pinged to me. It's around the lines of, so how would someone that is new to venture get started and provide support, provide value to the portfolio companies that they are investing in? If, let's say, you are totally new, how do you get started? And then, like, you feel like most of the time when I think this person is new, just like, how do I help my portfolio companies? Or like, I don't have the connections that that most established GPs would have. Like, what are some of the ways they can get started?
Yeah, I think there are many aspects of venture capital that you don't need, years of experience before you can start. So there are, of course, the junior positions of essentially being an analyst or associate, researching, let's say in today's world, Web3, what opportunities are in Web3 or the metaverse or NFTs or whatnot. Frankly, my generation, we don't know so much about this world, so we're relying on the younger generation to feed us, the most accurate real-time, analysis of what's going on. B, in terms of the portfolio support, I think there's a lot of value that can be added. So I mentioned before, we have a lot of hand-holding in that arena. So teaching them, in some cases, startups here don't even know exactly what ESG is and how that's different from SDGs, And so it's like an ESG 101 tutorial, and helping them, and not just the leadership, but the entire organization, understand what ESG and why it's important, right? But there's other aspects of portfolio support beyond that, that I think a lot of people are just starting out. Maybe they have experience in management consulting, or in my case, investment banking, capital structures, financing options, how to plan for capex, how to plan for, what kind of staffing should they bring on. All of these things, I think, there's a lot of advice and wisdom that you can provide, even if you're not the senior GP, on the team. And frankly, also sourcing. I think this world is becomes so flat. Yes, the GPs may have tremendous networks, but that's limiting, right? At the end of the day, I think so much of particularly at the earlier stage, is probably going to be sourced increasingly by just people going around and meeting companies, meeting founders, meeting young people at these exciting companies, and building networks, their own networks that way.
Got it. Yep. So just waiting for more questions. Anyone from the audience, again, feel free to have this time. Let's see. All right. If there's no one that has questions, I do have a few more questions on my end for you. I mean, you've been so helpful with all these insights. Love to hear more about, I guess, so we talked about leading rounds earlier on. What are, I guess, some of the things that are like things that you had gone through before and you really like regretted, or like you learned severely from like doing something and like past experience that you had. So I'm sorry, I'm like jumping on my thoughts, but I think it's along the lines of could you share more about like your past experience of leading rounds, and maybe one of the key lessons that you learned through a past experience, I would say.
So we have very limited experience because we've only really co-led one deal, which was the Series C for Jupiter, that US climate risk analytics company. It's early days. We haven't had too much to, lessons to learn from. But I would just say, leading or not leading, I think in doing due diligence, I mean, there's so many moving parts in that process. And oftentimes, particularly in the last, I would say, couple of years, I imagine VC in America in particular, my friends have been saying, what used to be a long lead time of at least 2 or 3 months before you had to make a decision has been compressed into weeks or days. And so how do you conduct, thorough due diligence in weeks or days, what used to take you, several months? Now, of course, being remote has been helpful, but that doesn't, cover all the bases. So in our case, it's so easy to just believe what the company's telling you because it sounds all so great, but maybe they've had employees depart who are key to the business. We didn't even think about this until later, but just talking with people who were key in the organization before who've left, why did they leave if they are willing to share that with us? And we did that with one company, one of our portfolio companies, and it was not, it was an amicable departure. He was ready to move on to something else. And he spoke very highly of the management, right? Even though he decided to do something else. So that was a great kind of a sanity check or whatever for us. Or, because we're ESG, our nightmare scenario is a company we invest in is, an employee, sues the company for sexual harassment or something like that, right? That's like the worst case scenario. So in these ESG interviews, we actually ask on the screen like this, not on a piece of paper, on the screen like this, flat out, have there been any prior cases of sexual power harassment is huge in Japan, power harassment or other kinds of harassment, it doesn't have to be litigation, but just cases that have been raised. And how did you deal with that? And what are you doing to prevent or mitigate those situations going forward? And just having because if we tell them we're going to ask them this question, they'll prepare an answer, right? With their legal team. we never tell them we're going to ask the question. We just straight out in our ESG other questions about carbon footprint, about blah, blah, blah. We throw that question out and we see their reaction, and faces say, and body language, speak very, very loudly, right, to us. And we've had situations where they've been very upfront. So we had a situation, this is how we dealt with it. We did not have a whistleblower policy, for example, in place. We put that one in place. We hired an external law firm, et cetera, et cetera. And that was a good outcome, right? Because they're very honest with us. The worst is they hide these things from us, and we discover a year after our money has been taken that they've got a lot of stuff under the rug that we didn't know about, right?
Yeah, that's
and
exactly
there's no guarantee in this business, right? There's no guarantee that you're going to have everything spick and span clean and perfectly, investigated. So it's a lot of, gut feel. But again, over a course of 5 or 6 conversations with not just the founder, but definitely the whole management team is super critical. How they interact with each other, that gives us a strong sense of how that business is being run and the culture.
Got it. Would you say co-leading it's easier, harder, or the same as leading? And what's the difference in the two?
Well, we only had, again, one experience co-leading. I think it's not are there tremendous benefits from, being a leader versus a co-lead? I don't think so. I think it's, we are very, very similarly aligned in our philosophies as investors. We want the same things for the company. So it's been great just to have an additional voice, right? And like I was saying earlier, in some situations, we know we'll encounter, because not like in private equity, you're the majority stakeholder in most cases, right? In venture, you're almost definitely not the majority. You have the tiny slice of the company. But if the other people on the cap table are, really focused on ARR or, making sure the revenues and the clients are experiencing very high growth, and ESG is sort of a distraction, that's their view, then we could be butting heads when it comes to, this process. So that's why it's very important for the company to explain to their existing investors, to explain to potential investors that because this is critical for their business, that's why they're working with MPower. And we expect that they'll be able to convince other people in the cap table that this is of utmost priority for them to grow.
So I know we are almost reaching the hour. Any last questions, again, feel free to put in chat. But last questions around board, right? So I know you're definitely on a board seat. How do you think what makes a good board member, I would say? I mean, a lot of the people in the audience might not even have sat in a formal board meeting. So they don't know what to expect, especially if they're new or they're old. Experienced. Like, what, in your opinion, is the key traits of being a good board member?
Well, I think in the startup world, as a board member, what is your purpose? Your purpose is to ensure that the company and their leadership is walking the talk, is delivering on the goals, the targets that they've said that they're going to deliver. If, say, the leadership team starts to stray from the goal, or something happens to that leadership team or the leader, your job is to find the next leader, right? The succession planning part as well. So I think it's crucially important, and it's a little bit tricky, right? Because as an investor, you're already biased towards, you want to support the leadership, you want this company to be successful. And so if something happens which makes the leadership or management team look bad, do you defend them, or do you support them, or do you challenge them? And I think it's super important to take kind of a more neutral, objective position, because at the end of the day, if something goes wrong on your watch and you're a shareholder and you didn't speak out, or you didn't try to mitigate, or you didn't really deal with that crisis in the way that it should have been dealt with, everybody will know that you are on the cap table, right? If you're on the cap table and you're a board member. So to be very aware of your responsibility as a board member is of course of utmost importance, and to take an objective view representing the view of the shareholder, your LPs, if you're a VC fund. And I think also is, to me, important is oftentimes the startup boards, they're basically close friends or VC funds that have been with them for a long time. But I was on the board of a startup here where the board meetings were often, it wasn't just reporting, okay, quarterly financials done, let's go to lunch. It was, wait a minute, this doesn't look right. Or wait a minute, this person critical to the team has left. Why did they leave? I mean, there's a lot of pushing and demanding answers. And I think that lively interactive discussion, it sounds obvious, but in Japanese board meetings, oftentimes that doesn't happen. So being aware, maybe before you go into the board meeting, what are the key issues that are going to be discussed, and to make sure that there's enough time to discuss them. Maybe talk to the other board members. That's been super helpful for me. I sit on the board of Uniqlo here. I didn't know, I shop at Uniqlo, but besides I didn't know really much about the company. So I just did one-on-one calls with some of the other board members, which was super helpful, right? To give me context, to give me history. Where did they come from and all of that. Sorry, there's a question from Diego.
Yeah, Diego. So let's see. His question is around what was the main trigger around transformation on the board? And is it market forces, stakeholders, or regulation most? Yeah.
I think it's probably, stakeholders, which is, from shareholders, but also from, I'm guessing, customers of the company, from employees of the company, just trying to ensure that, like I said, the company is walking the talk of what they promised that they would deliver. And if they stray from that, that commitment, then who is asking the questions to right that ship? So I think it's from all stakeholders, both internal as well as external. That was the main trigger. Of course, regulation is obvious, but I don't think that was the main trigger.
Thank you. Thank you so much.
So I also see a question on, is MPower planning to host any future deal flow session? Not sure you mean like to share deal flow. We don't really have sessions on this, but if you're working in a CVC and you want to chat, just reach out to me and we can maybe arrange a call. We are, by the way, hiring. If you look at our website, so if any of you are particularly in Japan and interested in perhaps exploring an opportunity at MPower, all the information's on our website. So.
Yep. Awesome. Thank you, Kathy, for your time here. Obviously, you've been super insightful, helpful for our audience here. And a number of our fellows are unable to make it, but I'm sure they will benefit a lot from this session. Last question, what's the best way to get in touch with you for the people in the audience?
If you go to the website, mpower-partners.com, I think it is, you'll see the contact information. Yeah.
Okay. Oh, Michael raised his hand. Go for it, Michael.
Yeah, thank you. First, thank you, Kathy, for your generous sharing about your experience. And this is Michael. Yeah, I used to be an ant in the US and recently moved back to China to pursue my venture career. So pretty new. My question is about the fact that in Japan there are much more IPOs than M&As, and you think that's not a good sign? I'm curious why. Why do you think? What's the difference between funding acquired through IPO versus growth stage ventures? To me, there shouldn't be that much of a difference, but maybe once you IPO, you need to review more stuff, and you need to be restricted by more by short-term outcomes, every quarter. Is that why?
Yeah. No, sorry. And yeah, that's a good question. It's more the in the Japanese context, I think the IPO is viewed as like a stamp of not just approval, but prestige by society. If you're a listed company, that's like a big deal. And so that's also playing a role into the bias towards IPOs. But like I said, it's very easy to list here. And oftentimes, because like all the things you described, you have to have more transparency. There's a lot more pressure from the markets once you go public. If you look at stock prices of many companies that have listed, with some exceptions, of course, of many, it's just like, it looks like a chart of Mount Fuji. They list and then they just fade out. Where I'm not saying the IPOs are bad. I'm just saying they prematurely list before they have really gotten sufficient traction in their business, before they, for example, scaled, outside of Japan. That's I think the problem. I'm not saying they should be 90% M&A. I'm just saying I think that the points at which they go public oftentimes is far too early. And frankly, a lot of it has to do with the brokerage industry here, the underwriters here. They're just pushing because a lot of the deals are taken up by retail. And it's a very lucrative business for the domestic brokerage firms. That's a structural problem.
Got it. Well, thank you. Well, thank you, Kathy. I think that's the last question. I know we went over time, but thank you so much for the extra time you gave us and all the insights. Awesome.
Great. Great.
All right, then I'll take care and see you in the next session for the rest of our audience.
Thanks, everybody. Thank you, Gerald.
Yeah. Bye.
Bye-bye.